other thing I wanted to hit on was related to U.S. hotels and then also OTAs. So what we like to do is we like to track sort of inbound and outbound U.S. traveler counts. So outbound being myself or you going to Ireland, and inbound obviously being someone from abroad coming here for a leisure vacation or for a business trip. So the difference between those two is U.S. outbound travel volumes, and there's a decent amount of people that travel abroad for leisure activities. You know, it's well in the millions, so a significant amount of room demand for hotels or alternative accommodation. U.S. outbound's tracking up 8% on 19. That's a slight step back from where it's at in April, where it was just a touch above low double digits. So plus 8%, but the inbound factor still tracking down 20%. And that's despite some loosening of entry requirements for all inbound visitors. So regardless of where you come from, the U.S. scrapped all the COVID-related inbound requirements for international visitors effective May 12th. So maybe June starts to improve a little bit, but really seeing inbound visitation sort of flatline. Our historical analysis has shown that, strong dollar or relatively strong dollar, obviously it's off its highs, does have an impact on those inbound volumes. And really the main takeaway here is, if you're a U.S. hotel operator that over-earned from your leisure customer because they really couldn't travel many places until kind of late last summer, you're facing really difficult comps this coming summer on the pricing side. You're not getting the commiserate inbound visitation to offset the folks that are looking to travel outbound. Because by the way, if you're staying at a luxury hotel here in the U.S. or anywhere, look at U.S. airfares just domestically and look at the rates on hotels. It's actually cheaper to go abroad, despite the transatlantic flights being more expensive than pre-COVID. So people are definitely tapping into that, and that's going to be a net negative for U.S. hotels.
Inbound bad, dollar up. This is like I needed another fundamental and independent research data point that is empirical as opposed to narrative driven to get more negative on the U.S. Retail environment and consumer environment with these travel comps in particular. I mean, this is actually, it's just, consider like you gave the example of you and I going to Ireland, which maybe we should do at some point. Loved it. With a strong dollar, we're going to love it more, Again, consider your Argentine friends, their currency, or your friends in Turkey. Their currencies are down almost 20% in the last 3 months against the US dollar. There are a lot of people in those two countries, by the way. I know people on CNBC don't talk about anybody other than Kramer.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.